What's up, guys? Welcome back to the Pro MG Money channel. Another day, another dollar, I guess it is. And today, as you've seen by the title, we're going to be speaking about why I think you shouldn't be tracking the JSE top 40. And for me personally, even though people who are tracking the JSE top 40 as of the end of 2020 are actually up, despite being in the pandemic, I still think people who are tracking the S&P 500 rather than the JSE top 40 got much better returns. And in this video, I just want to go over why I think tracking the JSE top 40 isn't a great idea, and because there are better things to track, like the S&P 500 or the Nasdaq 100. And I think the first and most biggest and obvious thing, comparing the JSE top 40 to the S&P 500 is the whole USA versus SA thing. Whereas America as a country overall is more wealthier than us. I mean, they have more people there, they have more land, more natural resources, more power. Literally everything is better in America, particularly when it comes to, stocks on the stock market. Even look at the stimulus that they had in America during, the rise of lockdown was significantly better than, the 350 grant, which we had here in South Africa, which I don't know how well the actual rollout went. But, just those slight differences show you how, growth in America is a lot better than it is here in South Africa. And classic case in point. There's a company called Jubilee Metals, which was the JSE's best growth company in 2020 with a return of 191%, which is really good. That's a great return. If there was someone who was in Jubilee at the beginning of the year, towards the end of the year, I'm sure they made a lot of money. But in America, by contrast, the best company in terms of growth was Novavax, which grew by, wait for it, 2,549%. Now, if that's not Premier League versus Mvela, then I don't know what is. And I know Novavax is a vaccine company in 2020. It was an interesting year for pharmaceuticals and vaccine companies. Still, the fact remains is that they outgrew the JSE's best growing company by a large margin. And that's one of the first things just to highlight. The second thing is that the JSE isn't as diversified. And by JSE, I mean the JSE top 40 isn't as diversified as something like the S&P 500. I'll always compare the two because they're the easiest one. And the biggest thing with the S&P 500 is that there are 500 companies versus 40. The chances of you getting a wider range of companies and industries and things like that with the S&P 500 is much higher versus the 40 that you have on this side. That's just pure numbers. That probability is higher on the one side than the other, but doesn't mean that that's always going to be the case. You could have 500 companies that are all in the same industry, and with the top 40 you could have 40 companies that each individually do something completely different, but probability says the 500 will always have more. And I think if you pair that with the fact that here in South Africa, we are still a very mine-focused country. Mining has a lot to do with our country, and as a result, if you look at the top 40, I think 10 or more, which is about 25% of all of the companies on the JSE top 40 are mining companies or somehow are involved with mining. And I know that most JSE top 40 ETFs or funds or index or whatever, the fund managers might actually just weight it so that that single industry isn't so dominant, which is fine. But I mean, if you look at an equal weighted JSE top 40, you'll have a lot of exposure to similar industries, and once that industry goes down, it's really going to hit you and you're really going to lose your money. I mean, if you just imagine closing retail, close banking, and close mines all at the same time, watch the top 40 go to zero. And I mean, if you try the same thing in America, they would obviously feel the knock. But there are many other companies or types of industries that are not directly related to those three services that I feel give them a much greater diversity. Personally, for me though, I don't like ETFs. Well, not that I don't like them. I think they are a good thing to have, but not necessarily that they should be the be-all and the end-all of your portfolio. I think you do need to pick a few good companies for yourself, because as good as diversification is, you're not in control when you're in an ETF or something similar. I mean, for example, if anything goes wrong with Tencent, watch the effect that it has on the JSE. Next point is that the JSE Top 40 doesn't actually perform that well. I believe most of us should be familiar with Satrix. If you're not, it's cool. They're basically just the company that offers you certain types of securities. And just to visually give you an example of what I mean, Satrix have a JSE Top 40 ETF, and they also have a S&P 500 ETF, both of which you can easily access through various platforms. And if you take it on over to MoneyWeb, just to take a look at the top 40 over the last year, on its own, it's grown by about 10%, but with dividends, it's almost about 12-13%, which for me is good. That's a decent return. I've said in my previous video that anything above 13% is good. Anything below that, but still greater than 9, is okay. Anything below 9 is just horrible. And yeah, that's pretty much that. So in the last year, it actually has done quite well. I don't have a lot to complain about. But the S&P 500 in the same period of time, they have actually come up 19%, which is a whole different story. Had you put the same amount of money in to your JSE Top 40 ETF versus this S&P 500 one, you'd be in a much better position just based off of these numbers that we've looked at now. And I think it's for that reason that you also need to, before you pick up a particular ETF, do your research on it, see why they did so badly. Think about why things could have been better had you have gone in a slightly different direction. The only problem though with the S&P 500 is that it represents the general market. So if the S&P 500 is down, the entire market will be down, which might trickle down to the JSE. It might not, but fact of the matter is that I would avoid having something like the JSE Top 40 in my portfolio alone. I'd much rather go for the S&P 500, and you've just seen from one company that sells both that the S&P 500 actually did better. And I think last but not least, traded funds actually aren't all of the craze. I know a lot of financial advisors or people who are telling you to get started out in investing will tell you that the crux or the bedrock of your portfolio should be a really solid ETF, one that you can trust, one that will maintain or hold its value quite well, and also pay out dividends over particular periods of time, which could be correct. But the thing is, for me, is that this is a very safe way of investing, which might be good for you if that's your risk appetite. But I think for a lot of people who really want to see something come out of their money, particularly like millennials and whatever they call the people who come after as Generation Z, we really do not have the same type of patience that our parents had, and what worked for them might not work for us. I mean, think about it. We live in a day and age where people came together and created a decentralized currency. When in the history of the world have you ever seen that? All currencies are always run by governments, but people were fed up and decided we need to come up with a new way of doing it, and came with our own decentralized currency, you see. So it's for that reason that I say times are changing, and you can't really rely on the old tricks to get you ahead in this new world. There's a lot of opportunities to grow your portfolio a colossal amount. All you need to do is take a little bit of risk, and it doesn't take a lot. I mean, you heard me earlier speaking about Jubilee Metals. It's a company that had you got it involved in, you would have made a lot of money. But what's the bet that if we go into Satrix's website, we look at all of the minimum disclosure sheets, not a single one of what they have will have Jubilee Metals on there, because old conventional ways of looking for stocks and places to invest your money just aren't working the same. And yeah, I think overall the point I'm trying to get at is that you need to be more imaginative when it comes to your investment strategy. If you just take the advice of what one person said or what most people are saying, or you go with the crowd, you together with the crowd will feel the pain. Personally, for me, I really wish I could be having this conversation with people who are in charge of managing, pension funds and all of that, because a lot of the time, you contribute your money into your pension fund for all these years, thinking that it's a huge amount of money, only to find that no, these guys just stuck it in the JSE top 40 and hoped for the best. Whereas it's not had the greatest returns over the last few years, and you could have done a lot better. I mean, you've seen on the Lobola challenge that we have ARK Invest ETF, which is doing quite well, which personally for me would outperform the JSE top 40 crazy. It would literally run circles around it with the companies that it's chosen. So I don't know, take what I'm saying with a pinch of salt. And as always, this is not financial advice. If you do want financial advice, please make sure you seek out the help of someone who's actually registered to do what they should be doing. And stay tuned for some of the things that we have coming up on the channel. I think it's going to be, as Bushiru said, a great year. And yeah, it's been your boy Prem Jimani. I'm out. See ya.